Hello, folks. We're in the pre-production part of the show here. I'm just getting everything set up so we can get John and myself live. We're going to go with a little bit different format today, folks. You're going to what you're going to see is that we're going to have a screen share happening. And while John is talking about the various different companies, I'm going to be scrolling through the companies that he's talking about. And we've got some exciting stuff there to share. I'm just going to get everything set up here. I'll just be a couple seconds more. Insert. Okay, now we'll update. And should be live now. If everybody hits play, we should be live. I'm just going to go to my website and make sure it's now the way it's supposed to be. And John Kaiser. There we go. Yep, she's live. So now, if you hit play, we'll be ready to go. And John, I'm going to get the show started here in a second. I'll tell you what, can some of my friends in the CEO chat site, can you give me a thumbs up to make sure that we're, when you're seeing this, you're only seeing the screen share from when I'm talking, and when John's talking as well, it should come up as well. So on that note, I'm going to get started here. Good afternoon, everyone. It's Alan Barry Labucan here. I'm the founder of the Alan Barry Reports and the host of this show today. Have exciting guest John Kaiser on the show. John has been just on fire with his various different picks that he's come up with for us on the shows. Many of you also know that we do our zombie show together, where we're out there trying to find some zombie stocks. But these are more of John's actual picks that we're going to be talking about today. So, John, thanks a lot for joining us again.
Hey, Alan, this is a great way to kick off a really long weekend.
There you go, John. And it does seem to be cycling where whoever's talking now has the whatever screen I've got on mine. So we're good to go, John. We are going to, before I jump into it, I'm going to start with my sponsor messages. As you can see on my screen there, now that we're screen sharing, I have 4 sponsors. One's Premier Gold Mines. PG is their symbol. They're a gold-focused company with what I believe is an enviable portfolio of projects from exploration through to mining in Ontario and Nevada, with partners like Barrick, Centerra, and Goldcorp. And you can visit their website at premiergoldmines.com to do more homework. Another sponsor is Sirius Resources. SOI is their symbol on the Venture Exchange. They're also gold focused. They're drilling a high-grade gold target at the Chichu gold project in Quebec. It's located next door to Goldcorp's Eleanor Gold Mine. You can visit their website. You see the location right there. And in the show, Sirius is actually one of John's picks. So he's going to be giving us an update on Sirius later in the show. Another company is sponsors West Red Lake Gold Mines. RLG is their symbol on the CSE. They're gold focused. They're drilling a high-grade gold project in Red Lake, Ontario. The big target is the Hinge Zone. It's a classic Red Lake target. Goldcorp is their 40% partner. You can visit their website at westredlakegold.com. And the final sponsor is Wolfton Resources. They have an exciting base metals project out in near Snow Lake, Manitoba. They're hitting high-grade nickel, copper, and cobalt. You can visit their website at wolfdenresources.com. So, John, let's get right into the show, because you're going to update us on Sirius anyways. So let's start with Arizona Mining, AZ. This is one of John's picks that he was very early in recommending on our show and to his subscribers. And they've done exceptionally well. John, what's the new news that has you your attention lately?
Well, they just reported the results for hole 44, which was a 300-meter step out to the northwest of the sort of a 400, 500 meter zone for which they published the initial resource estimate back in February, and it still has the good grades. But more importantly, they weren't expecting an awful lot in this area. They didn't think it had the right geology, but in fact it does. So I think this thing is on track to becoming this 100 to 200 million ton high-grade lead, zinc, silver system that will be developed as an underground mine. And the stock had started to fade earlier this week, but when the news came out, it bumped back up again. It is kind of in a holding pattern here because it already has a $450 to $500 million valuation. But the zinc price has started to tick up. It was 95 cents this morning. It is the best performing of the base metals out there. And there seems to be ever more interest in the idea that maybe finally zinc is going to go on that run that creates an appetite for zinc-based plays.
So, and what's sort of upcoming for them, John? What do you see on the immediate horizon that's kind of getting your attention?
Well, they've got 9 drill rigs on the property. They will be infill drilling and stepping out along the whole sort of 1,500 meters right to the end of the property. And what the main thing we're hoping to see is a series of holes in a line along the entire strike of the old trench property, hitting these sort of high-grade numbers such as we have recently seen, which will give us optimism that yes, they will be able to put together a 60 million ton deposit of 12 to 15% combined lead zinc plus a decent 2-ounce plus silver kicker. Right now they've got sort of a 12% zinc equivalent of 43 million tons or so. They would like to do a 10,000 ton per day underground mine. And so as we get these step outs over the next couple of months, hopefully the number crunchers can put together something like the outcome visualization that I've put together.
I'm just pulling that up, by the way, John. I've got it up now.
Oh, okay, I can see it. Perfect.
I think you might have your audio on another. Oh, there we go. Okay, so I'm picking up Arizona mining. There we go. I got the outcome visualization on now, John.
Yeah. Okay, so why don't we just explain to our audience how to work this? You can, if you scroll down to the big chart there that you have there right now, that blue channel is the fair speculative value channel for an outcome, which in this case I'm modeling at about $1.25 billion Canadian using a 8% discount rate. And in theory, your little star there should be parked inside that blue channel and move up and down inside it. As you can see, it's in the yellow channel, which is what I call the S curve, which is when we do not yet have an economic study for a project, the market has a lot of uncertainty, and when we have a new discovery emerging like this, it tends to be biased on the optimistic side, going to like glass more than half full. So what I believe happening here now is the market saying, I'm conservative in my assumptions of 60 million tons of 4.5% zinc, 4.5% nickel, lead, and two ounces of silver. They're saying it's going to be better, and they're probably plugging in a bigger zinc price. Right now, mine is showing 93 cents a pound. And there's also the possibility that this thing scales much bigger. We have here a story of a major system with a big metal budget, and these guys are thinking that we're going to hit perhaps even a high-grade copper skarn.
Hey, John, I had a couple questions for you. First, I was going to sort of put it into context for our audience. Do you have me on another audio too, John, or just one? I'm getting a little bit of feedback there. Working now. Okay, so folks, what John has done here is this blue screen here, what you're seeing is He's projected, based on these various different project stages, from grassroots, target drilling, discovery and definition, infill drilling, metallurgy, PEA, pre-feasibility, feasibility, construction, and production. This is the kind of trajectory that a company with a outcome visualization, a fair value visualization, is it, John, of 1.25, so $1 billion too?
Well, yeah, if at the end of the day, this deposit exists and has been demonstrated and has a permit and all that, it would be worth $1.3 billion.
Based on the parameters that you plugged in, such as zinc at 93 cents a pound, underground, all those variables that you've got there, resource of 60 million tons. That's what gives you that 1.25 valuation, right, John?
Yes, and if you just scroll beneath that that graphic to what's the fair speculative value ladder, you'll see that uncertainty range, column 2. And the uncertainty at this stage is still sort of like 10% or to 25%. In other words, there's still a lot of facts to be marshaled into place so that we really know what's going on. And what my model does is it says, okay, if it's like 10% to 25% uncertainty and 1.2 billion is a plausible outcome, then your fair spec value is about 10% to 25% of that. And you can see there 125 million Canadian to 300 million Canadian. And that's basically how you price a bet. If you expect
exactly. And John, that was something that I think we've talked about before. And what John's done here is very unique. And I think what you're looking back is, if the outcome is what John has based on these particular criteria, this is what you would expect in evaluation. Roll it back even to target drilling. This is where you would expect them to be in a normal market. Now, if we get a more bullish market, which is this S-curve type action, that's what you would expect, where you can get more optimism in the valuations. And in this case, Arizona Mining is at the metallurgy and PEA phase, and they're still on the low end of the band there, John, but you still have room. You could still get a lot of speculative value or more higher valuation even at this stage in the S-curve, correct, John?
Yes. For example, if you scroll down a little lower to the alternative metal price scenarios, so suppose you go to the fantasy price of $2 a pound for zinc. Then this thing goes from like 1.2 billion. It goes US or for Canadian, it goes up to about 1. Actually, I'm getting all confused here.
Oh, I got it here. So now you're at a.
Yeah. So the US was about 900 million at 93 cents, but at say $2 zinc, you go to 2.2 billion US, which is about like 2.8 billion Canadian. So almost more than double what the current stuff is. So the way the S curve is the S curve reflects possibilities that blue channel will actually move up higher than it currently is, that there could be surprises, that zinc pops to $1.50, that the grades go much higher to, instead of 9% combined, go to 12-15% combined. And all of that boosts the NPV. So once you have the economic study, things become kind of boring, because you know it's only going to end up being worth less as they find out more details about costs and so on. So this tool is really helpful in the most exciting part of the exploration cycle, from target drilling until an economic study is finally delivered.
Okay, John, now you've also done this for another one of the picks, which is Sirius. And I'm going to just get to that one right now, John. So Sirius is a sponsor of mine, I want to say that. And John and why it's a sponsor is John brought this company to our attention. John, I've gone to the outcome visualization project, and I have the S curve and the blue curve up right now for Sirius Chichu. So we can chat about this one now.
Now here's an example of a project that's sort of at the discovery delineation stage, but unlike the Hermosa Taylor project of Arizona, we know a lot less about what the zone looks like. So what I've done here is I've created almost a fantasy outcome of what I think is possible based on the comparison to the nearby Eleanor deposit. And so I imagine, well, what if there's 13 million tons of 9 grams per ton gold there? And suppose they simply mined it at 2,000 tons per day and trucked it over to Eleanor. What would this beast be worth at the current gold price and with the sort of costs associated with running it through the mill? And so it comes up with a sort of just under $1 billion Canadian, which based on their 122 million or so, 121 million shares fully diluted, that would be like an $8 price target. Now, it's really important to emphasize that we don't see that tonnage, that zone yet. We're inferring this from a geological context. Somebody can come up with, say, 1 million tons of 2-gram gold, and guess what that would be worth? That would be worth nothing. Right. So, you know, your blue channel would crash way down. So at this moment, this project's benefiting from the glass half full. They got $5.5 million in the treasury. I talked to Dominique recently. He says that they will be drilling in the second half of July, starting a 10,000 meter program, and they'll start at the southeast end where they had the hole number 52, and try and figure out the geometry of that. You know, there's some people who think, oh, you've just hit a tiny little fold where the gold managed to concentrate and there's no real size potential. Well, they're going to figure out that right away before they become more aggressive on the rest of the project. And of course, in September, the private placement comes free trading. So they better have done some aggressive drilling on the project and shown that, yes, this geological context is capable of delivering good intersections that allow us to start really speculating. As you can see, $49 million valuation, it's not in the S-curve for my scenario yet, which is a sign that the market doesn't yet see that really big picture potential. But when you start seeing it rise into that S-curve, then you better check, because there's probably some rumors out there in the system that some important intersections have been pulled that greatly expand the scope of this story.
My word, you know, I see what you mean there, John, about the speculation at the early stages of infill and delineation and metallurgy and that sort of stuff. Look at the valuations. It can go from 49 to, or let's say 49 million valuation all the way up to nearly $1 billion valuation. In fact, you could theoretically see almost the entire valuation you would get in a takeout at these early stages.
Yeah, I mean, the fair value range is theoretically what a major should not pay more than that, given the stage. However, if it really is starting to shape up, look like a sort of $1 billion prize at the end of the day, the major's going to pay up, because you know, if you're still at discovery delineation, you don't know. Goldcorp paid $750 million for Virginia Gold before there was any resource estimate in place.
And $1 billion for Gold Eagle.
Yeah, same thing. Yep. So it's especially great when you have an uptrending metal price market, and then the majors get panicked into, you know, being criticized for missing the boat. We're not quite into that market yet, but hopefully we get there in the not too distant future, thanks to Brexit and people like Donald Trump.
I can see two things that you can learn from this, John. It's one, you know, when you should be looking really closely at the valuation, but there comes a point there where you got to kind of theorize, well, if we're in a glass 3/4 full or almost full, which I think we'll come to for gold going forward, you know, you still got to evaluate, am I getting pretty much whatever I'm going to get by holding on to this for another 3 or 4 years? Because to go from the discovery infill drilling stage to production, you're looking at 7, 8 years of waiting to get that ultimate buyout, right? Or the full value for what you see. You can take about 80-90% of it in a bullish heated market.
That's right. And you know, if you do factor in the time delay for what the outcome is, if you have 7-8 years before your mine's going to be in production, that's going to hurt your NPV a fair amount. But for some perverse reason, the market doesn't do that when it thinks this is real.
Mm-hmm. Okay. So anything else we can see in this in this so the big things you're waiting for on Sirius, John, sorry, I'll summarize here, is the drilling this summer, obviously, and more drilling not only in around hole 52 but also then in the northeast corner as well, and moving up between the contact of those two
yeah,
structures.
if you want to click on the tracker that I did on, I think, June 10th, you'll get some graphics. You know, just go to the home page and scroll down, and you'll find it. I can just give you some orientation.
Okay, what day was it on, John?
June 10th tracker.
Beauty. There, I got it. I'm learning how to get around your site, John.
Yeah,
You got so much on here.
Show that drill hole plan. So this whole area to the northwest, where you see all the orange and gray things, that's the new Wildcat zone, where we're like hole 47 and 45 hit something. They're going to start at the southeast corner where you see hole 52, because they already have a lot of information there. They're eager to stitch it together and show that there's continuity between the high grade intervals. They believe that there are these northeast structures, like you scroll down to the next one.
And by the way, that 52 was the one that got everybody excited on the stock when they announced that was very high grade. Okay, now I'm at the meta sediment.
Yeah, so you see those colored lines that they've drawn? Those are sort of their inferences of where they think these sort of cross-cutting high-grade structures are, where when they started drilling from the southeast towards the northwest, they started getting a better sense of how these holes line up. But they still need to do a lot of work to stitch these together. There's still skepticism out there that they're not just hitting local blebs and things like that.
Okay, now that so these are structures, zone L, zone K. I'm trying to see the contact of those geological packages and the structures.
And you'll see all those holes that are sort of oriented towards the southwest. Those are all the earlier holes, because they felt that the contact
all these
tonalite and the meta sediments was the control. So they were trying to get a true width of the mineralization, and it wasn't really helping them very much.
Okay.
Now, if there's going to be any action between now and September, it'll probably not come from news that they produce, because when they start drilling in late July, it'll be like late August before they have any results. However, the partners to the south, Goldcorp, Azimuth, and East Main, those ones have proposed a $2 million plus program on their project. So we may get some joy out of that one. And Azimuth's one of my bottom fish picks, which doesn't have a lot of stock out, has about a 27% interest. East Main is a spec value hunter recommendation, where some new management has taken over in the last couple months. They're sort of focused on the Eau Claire project, which is a high-grade gold system also in central Quebec. But their biggest upside, I think, is with the Eleanor South joint venture. And watch.
Now, isn't that part of why there was a management shakeup at East Main, John? Wasn't there something to the effect that shareholders wanted more activity on the Eleanor South, and East Main was more focused on their key project, and that shareholders want to see action on both?
No, people were complaining because they spent more than $30 million on the Eau Claire project, had yet to deliver a PEA, and it seemed like it was an endless story. Every year, raise more money, drill more holes, And then, of course, a couple of years ago, when they finally figured out a domain model for the system, they actually made the deposit smaller because they realized they can't connect the dots they were doing before based on the new understanding. With greater infill drilling, they think they can get the million ounces they lost back, but that means more work. And so the market got kind of unhappy with this and said, this thing's not making sufficient progress, and pushed for a management change. I think it was like one grumpy broker who was unhappy, who had bought a bunch of the stock after Probe got taken out by Goldcorp, and then stirred up all this trouble.
Mm-hmm. That's and so now, but they seem to have more of a commitment to doing something on the Eleanor South, right, John?
Yeah. But they'd all been in disputes with each other about what to do next and so on. And I think with the pressure created by the threatened proxy battle, the company got the message that we need to be doing interesting stuff on multiple fronts. The market doesn't want to just sit here and wait for a PEA that's going to be not so great on the Eau Claire project. That we want to see this exploration. And Jean-Marc Lulin gets a lot of credit for beating the drums about the potential of the so-called Chichu system. He has been really pointing out that you guys don't understand this thing. And because he's the minority partner, nobody was really paying attention to him. So
that's the Azimuth guy.
Yeah, he's the guy who thinks that this tonalite's not a vertical intrusive, that it's actually a slab, and that it served as something of a stopper, a plug, and that the mineralization we're seeing inside the tonalite is actually leakage from a much bigger system below, where there hopefully are those gray wacky type of metasediments that make Eleanor tick.
So that's more of a cover.
Yes, so that's why I'm eager to see them drill some deeper holes.
John, what's the symbol on Azimuth? That one sounds really interesting to me.
AZM for you Canadians, AZM for you Americans.
AZM, AZM, perfect. I want to do some homework on that, John, because I am, I'm a big believer in looking for these things where others are found, and we got this excitement going with Sirius, so I got to do some more homework on that Azimuth.
They've kept the structure very tight over the years. John Tognetti from Haywood is probably one of the biggest shareholders. Jean-Marc does a lot of sort of data gathering stuff, synthesizing regional data sets and coming up with models as to where there should be something. He's got projects way in the far northwestern corner of Quebec, about as remote as you can possibly get. And of course, he's supposed to be a prospect generator farm out guy. Never, spending his own money on actual drilling. So he's in a tough spot right now because at the moment there is no appetite for remote grassroots conceptual projects. But I think this Eleanor South participation is going to get more eyeballs on the company. They'll probably get refinanced.
What's their interest in it, John?
It's about 27%.
And they can wait a long time before they got to spend any money, right?
Yeah, and I think they're debating whether or not to start chipping in, because 25% of a $2 million program is only like $500,000 or so, and you don't necessarily want to dilute at this stage.
I'm going to take a close look at that, John. That sounds like a really interesting one to me, and it kind of falls into, you and I are kind of sciencey geeks with this exploration stuff, John, and I think that there's a lot of angles that can be gained from that. Another one that you talk about a lot, Scandium International, they've got some elements of looking at things from a different sort of scientific perspective, right, John? And that's one that it's really been wearing on me lately. Not wearing in a negative sense, but my enthusiasm and interest in the project continues to gain strength. I just like the concept of, being able to save big industries a lot of money, that the cost of what you bring to the table is so little, but you could make so much off of producing that. And so What's going on with Scandium International these days, John?
Well, they delivered their DFS in April. They have filed an environmental impact statement in New South Wales. The 30-day comment period just ended. No issues of any consequence came up. So now it's going through the rest of the stages. They hope to have the mining license at the end of the year. The market wants to see an offtake agreement. And George Putnam, the CEO, says, well, you'll have to be patient because these things, aren't negotiated overnight, and our technical report's been out for only like a month and a half. And this technical report is the key to getting end users to take the company seriously. Now, on that front, some rumors have come to my attention, which has made me very, very bullish about the scandium offtake market. You may have noticed that Mark Smith, who's NioCorp, has been talking about their scandium byproduct credit for the Elk Creek deposit in Nebraska. It's primarily a niobium deposit, but they're trying to make it economic by including a titanium dioxide and scandium credit. Now, Mark recently took over IBC, which is a beryllium, a downstream beryllium alloy fabricator, and it's been spinning its wheels losing money. But one of the key guys there is Chris Huskamp, and Chris Huskamp is an aluminum scandium alloy expert. In fact, he's the lead scientist on a patent, which if you Google it, is held by Boeing and Ford, which proposes to produce an aluminum scandium alloy that has 0.06% scandium. And so, what does that mean? It doesn't mean anything. Well, the theoretical minimum for scandium in aluminum as an alloy is 0.1%, which is below that. All the special anti-corrosion, the ability to be weldable and so on, the strength and all this stuff, all those properties disappear, and it's just boring aluminum. So that's kind of a problem, because that means at $2,000 a kilo, your aluminum scandium material is going to be quite expensive. Now, the problem with the Huskamp's patent is it uses zirconium, which is not a problem, but it also uses erbium, which is a heavy rare earth, and you really don't want to have to mix erbium in. But I've heard that there are groups now working on reducing the scandium content to 0.02% to 0.04%. In other words, like 20% of the limit right now. And that's like dropping the price of the scandium input 80%. So if it were to require you $2,000 worth of, all of a sudden it'll cost you only $400, $500 worth to get the same functionality. That opens up all kinds of applications that are price sensitive, like beverage containers, Ford cars. You may have seen that terrible video where you have some Chevrolet pickup fans drop a bunch of bricks into the back of a pickup, and also of the Ford F-150, and then they show how the bed gets all gashed to crap, and they're all giving thumbs down on aluminum. Well, aluminum scandium alloy would have those rocks just bounce around and not dent that Ford bed. But at 0.1%, that would be a very expensive bed, and drivers don't really want to pay a huge amount. But you get that down to 0.02, 0.04%, and all of a sudden, it's competitive. And then those
now you're not just talking making a difference in the airline business, your cars, your drinks, what you drink out of, all kinds of different products can then afford that combination, right, John?
Yes, and even boats. Like you take the whole American Gulf of Mexico there and the eastern seaboard, and they zoom around in their brackish waters, and their aluminum boats in that rust to hell unless they got all this special stuff done to them. Well, the boating holy grail is an aluminum scandium boat, which stays nice and shiny and doesn't rust in the water. So there's another sort of a banal, mundane usage that is price sensitive that would really benefit from a technological breakthrough that lowers the minimum from 0.1% to 0.02%. So if this comes out in the open, and it's possible that Mark Smith has given Chris Huskamp a mandate to, hey, figure out how to do this. Go beyond your Fort Boeing patent. Get rid of the erbium. Make this happen, because that will
And does it
totally.
sound like that's a possibility, John?
Yes, I believe it is a possibility that this breakthrough is going to come through. Then both Cleantech and Scandium International, with their respective deposits capable of 300 tons per year, well, then they will be not enough for the demand. It'll go way beyond the 1,000 tons per year that I see now possible, just based on the 0.1% limit.
And wouldn't this bring into the possibility a whole lot more potential off-takers, John?
That's the whole point. Because aerospace really isn't price sensitive. Military isn't price sensitive. They just need the availability, the reliability of supply. And they won't do any off-takes at this point, because what's the point? They don't know that the flow sheet of Cleantech or Scandium International will actually work, that they will be able to sell, produce a meaningful amount of scandium at a stable price. They're all in the back room watching this with great anticipation. It would be nice if one of them stepped up and did some sort of token offtake agreement for something, not as mission critical as a, fuselage on a plane or a landing strut or something like that. Because that would certainly help.
Were you telling me one time that you could use this for pop cans or beer cans? And
well, that's one of the mundane uses. I mean, those hydroformed cans, which have all these strange shapes in that, in order for them to hold their shape, they need to be thicker than your standard optimized, Coors beers can or something like that. So weight is everything in shipping fluids. Since it's not the can you sell, it's the fluid that you sell. So the more they can reduce the weight of the container, the more profit they make. So if they could get a thinner aluminum container that doesn't crumple and other things like that, that would soak up an awful lot of scandium.
Huh, man, it sounds like there's so many applications for this stuff. Well, you just have to start thinking about everywhere where they use aluminum, right, John?
Yeah, I mean, and even other things. It's like bicycles. You've heard of scandium bicycles?
No.
Well, the scandium aluminum frame, they like it because it's light and it welds to the rest of the parts, and it doesn't shear when you torque your way up some hill or some that sort of thing. But there's an Asian bike maker which sells a $4,000 scandium bike to North Americans and Europeans, and sells the same thing for $400, but just calls it a bike that's built to last and is a really good bike. And the thing is, what they've figured out is that the fabrication cost savings using aluminum scandium for the frame and that exceeds the extra cost of the scandium. So scandium's kind of like a flashy thing that helps sell bike because it's exotic, but it's obvious that like general run-of-the-mill bicycles could end up being made of aluminum scandium that soaks up quite a bit of scandium. There's all kinds of these types of sort of ordinary applications that would especially benefit if you can make scandium available on theoretically an unlimited basis.
And so why do these that can benefit so much from it, John? What is the disbelief that they can produce this, or why aren't they cutting deals with Scandium International and the other one you talk about?
Well, the end users, mean the mundane end users, like say for example Apple and its phone cases. Right now it uses a Series 7 zinc magnesium aluminum alloy. This works. They have it. They don't want to do a deal for something that doesn't exist yet. And the mission critical ones, they have certification cycles to go through. Why bother with that unless you're guaranteed the material? So they're not going to really do a take or pay type offtake agreement where they're on the hook when there's no guarantee that the company can actually supply it. So it's the market's attitude as well. But without an offtake in place, nobody's going to give you the capex funding. What really, in my view, needs to happen is that somebody is going to come up here and say, I'm going to put a $80 million equity investment into this project, and treat it like a pilot plant study, where the first 35 tons, well, as soon as we make it, it'll fly off the shelf like hotcakes. And when we know we can do this, then we go to the big boys and negotiate offtake.
Is that what a pilot facility would cost, John? Around 80 mil?
Well, see, this is so small. It's like a 250 ton per day processing facility.
Wow.
So that costs $80-90 million US. To double it probably costs them a mere extra $30 million.
And could it be sort of modularized that way into production?
Yeah, totally. I mean, the footprint that they're permitting is going to be large enough to allow expansion 3-4 times of the output. And of course, they would phase that in over time. But the market doesn't yet get the scandium story. I mean, they're all into this lithium BS right now. It'll come with scandium. All you need is somebody like Elon Musk from Tesla, believing that scandium's going to be a reality, and then come out and say, yeah, we're going to add this to our cars. And since Teslas are by definition cool, you add scandium to them to make them even better, functionally better. Well, then Wall Street will be all over the scandium projects.
Perfect, John. Well, let's move on to the next company now, which is let's talk about Peregrine Diamonds, John. Peregrine's topical for a couple of reasons. One, they have a PEA coming out fairly soon on their diamond project up at the Chidliak project in Nunavut. Recently, there's been some permits that have gone through in Nunavut, and one high-profile case where Sabina, SBB, had been turned down. And so I think that's something that's of concern, John. Have you talked to the guys or anything there on the PEA when that's coming out, and any word on the permits? I've known the Peregrine guys since forever, and I know that they've dealt with permits up in the Northwest Territories, which is no small feat. So I know these guys to be pretty on the ball when it comes to this stuff, John.
Yeah, well, it's interesting that you bring up Peregrine, which is a Eric Robert Friedland company. The Cleantech, which is the other scandium company, is also a Robert Friedland company, and they were supposed to have their definitive feasibility study out in June, and I didn't see anything on the Australian Stock Exchange listing section for that company. And of course, Peregrine's PEA was supposed to be out in H1, at the end of June. Well, if it wasn't out last week, that means it's probably going to be a couple of weeks away. I talked to management, and they said that they were absolutely besieged with telephone calls right after that Sabina decision, because of course Chidliak is also in Nunavut. It's in South Baffin Island, about 150 kilometers from the capital, Iqaluit. And their response was, well, we have been very much on top of the environmental requirements. BHP was the funding partner. BHP already put projects into production, put Ikati into production in an Arctic setting. So they think, it's never going to be easy to permit anything in the Arctic in Canada, but they think that they're crossing all the T's and dotting all the I's, and that they're not going to have some surprise negative reactions such as the Sabina project encountered. And they've done their caribou monitoring since 2009, constant monitoring, and that part of Baffin Island does not have significant caribou herds. In fact, they've counted only 13 caribou, spotted 13 caribou during that entire period. He does point out that the caribou herd is an issue in the area of Sabina, even though it is a diminished herd, but it's precisely because it's a diminishing herd that it is a very sensitive topic. So hopefully they don't have that problem. But hey,
Yeah, you know, John, to me, I mean, I'm First Nations myself and a mining entrepreneur, and what I've always tried to be is a bridge, and because I ultimately want to see opportunities created up there. And you brought up Acadie, which I have relatives that actually live in the NWT and have worked at Acadie, so I've seen the benefits and the opportunities it creates in those communities. And you know, I don't like to see the situations where Sabina has those, has problems like that. But I have I have a lot of confidence with the Peregrine guys because I've seen, you know, back, she's passed now, but Wendy, they had a Wendy Matheson that was, you know, really forefront of their initiatives to work with the local First Nations up in the NWT. So I know that Eric and the team are very aware of that and do all the, you know, try to cross all the T's and dot all the I's. So I'm encouraged by what you had to say there, John, on the caribou.
Yeah, and Tom Peregrine also pointed out that the Nunavut government has declared this southern part of Baffin Island a transportation corridor for some sort of regulatory level that I don't understand. So there is a desire there to see development happening on Baffin Island. And of course, First Nations people are going to be the primary beneficiaries of that, whereas I'm not sure what really is going to be a great economy up in the middle of the main continent.
Right. Gotcha, John. Okay, so
so hey, pull up the outcome visualization for Peregrine.
All right. Okay, so that's Chidliak, right? Right there.
Yeah.
I got it.
So this is going to be an interesting test because in fact, I used a lot of the numbers that Sabina used for its Back Lake project to say, okay, here's a similar scale mining operation, and what would the capex be in the operating cost for open pit mining and so on. So I came up with my own model here, and at a 9% discount rate, I come up with a just under $700 million Canadian outcome, which would be worth $1.92 based on 363 million shares fully diluted for it. And as you can see in the thing, that $74 million market cap is in the lower end of the fair value for that outcome. Now, if this PEA, the market's been sort of so hostile towards the Friedland thanks to those, deeply discounted rights offering that caught everybody off guard, that they have not been willing to give them a glass half full benefit of the doubt. So Peregrine's being priced for a negative.
Well, you've just given investors here a reason to give them the benefit of the doubt, John, because the big complaint is that they've got all this stock out, right? But that stock is factored into this $74 million market valuation that is currently based on, what I would think is a fairly reasonable estimate of what might come out of there. They are being valued extremely low relative to, an optimistic valuation or even just a more normal valuation. They're at the low end of the trading valuation.
Yeah. So if you just scroll the screen down to the fair speculative value ladder table, you can see the highlighted. We are literally at the low end of fair value range, and I would say if we end up getting a number similar to mine confirmed, and they may actually be similar or better because mine is just life of mine averages, which combines two different mines of different grades, whereas they will have it optimized to mine the higher grade, higher value CH6 pipe first before they move on to CH7. So in this case, I may actually end up having understated what the PEA outcome is. So
which makes it then that they would be really down here even more, John? That star would land down here more even. So they're even more undervalued.
If what?
if you are conservative in what you presented here.
Well, yeah, that say it comes up and it ends up being worth $1 billion rather than just 700 million. That whole blue channel would rise higher, and that little 20, if you scroll down, the 21-cent price would be completely outside the channel. That's why I think this PEA, when it comes out, is going to be a bit of a watershed for this company. It's going to flip the glass half full. We will probably see the stock double, go to 40, 50 cents. And at that, I mean, they will need to raise more money to do the next stage. But what's had everybody freaked out is that they've been willing to do it at ever cheaper prices, which is a rather unpleasant way to reward your supportive shareholders by handing them losses over and over again as you make fundamental progress with your project. So it's been just like with Scandium. My Scandium International has been really frustrating. Just watching these great stories sort of go nowhere because they got a lot of shares outstanding, and people are sort of bummed out about management isn't promotional enough, or management is too promotional, and when they're not promotional, they're hostile towards the shareholders. I think we're going to see some quick rewards for spec value hunters who are long both Scandium International and Peregrine Diamonds in the next little while.
Well, John, you've made me come around on the story simply because of this chart right here that I have up now. My bitch has been that, look how much stock they got out and all that sort of stuff. But again, you put it into the context of where they are and what they have. And, I have to look at the numbers, and it tells me that, right now you basically have very little on the downside risk, and, quite significant. Here you have in this chart, you're talking about anywhere from 21 cents, maybe even over $1. That's something that I'm interested in a big way, John.
Yeah. Now, this
maybe they need you to help them explain the story of the valuation relative to the quality of the asset.
Well, I think what happened with Peregrine is that the institutional audience that was in it departed, and a retail audience kind of took it on. And what have we got? We've got a resource estimate with sort of like a modeled carat number and all this stuff, but no, retail doesn't know how to do the economics on this. And the institutions are saying, we're back when you have a 43101 QP signed off economic study that tells us that BS numbers like what Kaiser comes up with are actually real. And then you will see a shift. Institutional capital will come into this company, and they may even attract a minority partner, maybe one of these jewelry type companies, to come in and maybe put up the $50 million needed for a final feasibility study and buy a 30% interest in the company, leaving Peregrine Diamonds in charge of developing this project. And even though this is kind of just 2 pipes, I think the Chidliak field is going to be a very long-lived diamond field. They haven't really fully assessed all the pipes there. I think there's going to be lots and lots of pipes found. It's never going to be huge because there just aren't any really large pipes there. But I think this thing.
Hey, John, if they can find, a half a dozen of those, or, 3 or 4 or 5 of those, they can make a lot of money mining diamonds up there when you've got a capex of, most capexes in metals these days start with a B. This one's still a third of a B for your capex. So, yeah, I'm a big fan of diamonds, and it's cheap to mine them. It's pretty simple mining operations, low cost of bringing it into production. I really like these 2 stories you presented here, John. Peregrine's a company I've followed in the past in my reports, and I'm looking really closely at it again here with this PEA coming out soon. I'll have to give Eric and the boys a call here soon to get an update.
Yeah, well, they're not going to tell you anything right now because they're very conscious of not leaking anything. But yeah. I would expect, before the end of July, we'll have this PEA out there. It'll be like the dog days of summer, but of course, That's when you pay attention to things like
I
that.
totally, John, I agree with you completely. That's when you find things that everybody else misses. So I'll be watching closely for the PEA. But seeing how we're talking a little bit about diamonds now, John, there was recently some news out. Well, yesterday actually, Lucara auctioned off their big 1102 carat stone, I think it is,
Yeah.
or tried to auction it off, and I guess it didn't meet the reserve bid that they had in. I also heard a rumor that afterwards that they had a much higher bid come in from a private group. I don't think it's that huge of a problem. Some are blaming it on Brexit. What are your thoughts on that Lucara stone, John?
Well, I mean, I'm not an expert on what the quality of this stone is. It is interesting that a stone, an 800 carat stone, sold for $63 million, and the bidding here stopped at $61 million, which is a smaller per carat
And
number.
it's probably the same the fragment of the same stone.
Now, of course, I think maybe part of the problem is that this stone was broken. And I think it was possibly broken during recovery, and maybe the yield on this stone, when it's cut into smaller stones, is not going to be as good as with this other 800 carat stones. These are Type 2A stones, and typically these are very good quality D stones with no inclusions and stuff like that. So the shape of it will limit what sort of cut diamonds, what volume of cut diamonds you will
So
get out of
maybe
it.
it was a little more risky than the other stone.
Yeah, so I mean, these guys, they examine it, they look at it with their lasers and that, they figure out their optimal cutting, they figure what they can sell it at. But you know, your comment about Brexit having put a shock into the world, you know, I think you're right there, because Brexit was not expected. It has set in motion the disintegration of a globalized economy, and luxury goods are going to be one of the sectors that would be hit hard by globalization coming apart and all these nations retreating into little walled off, isolated entities. None of that is good for global GDP growth. So maybe it's just sort of a knee-jerk reaction to the fear that Brexit has caused.
Well, I think that, you know, one of the things that Brexit being so, you know, it woke everybody up really quickly as to what can happen. Like they were talking, well, it might be 1 to 2 years before you would feel the effects of this leaving. Well, actually, you're going to feel the effects the next day, because the currency got smoked, which means inflation, everything they import is going to go up in price. And they will see that in an already slowing economy. And what I'm hopeful of, John, is that it sends a message to the other wingnuts of the world that, you know, isolating yourself, not being part of trading groups, is not a smart economic decision,
Okay.
especially when you're in a global slowdown.
But I think the scarier implication is that what was the message that the Leave people gave? Well, it was that we don't like immigrants, we are racist, we are unhappy about the future. Is this any different from Donald Trump's support
No,
base?
not at all.
I think, in my view, Brexit suddenly gave people reason to think that, hey, maybe this clown Donald Trump will not lose to Hillary Clinton. And if Donald Trump is president, who is the U.S. dollar going to decline against? You know, you're not going to have a U.S. dollar decline against all these other disintegrating countries. No, what you have is you probably have a deflationary collapse of asset values around the world, as everybody realizes we're going to hell in a handbasket with
I
all
agree.
these functional leaders that go back into like the 30s type period.
Horrible. The last thing that the U.S. needs is isolation.
That's right.
You know, I'm hoping that this is a wake up call to to those that, I mean, they're even seeing it now, John, in the youth, that I think they maybe got sold a bill of goods a little bit too, that this thing was in the bag. And the younger kids, the younger people, they're the ones who will tend to not vote when they think that, it's going their way. Like, my vote doesn't really matter anyway, so why bother? And I'm seeing a lot of outpouring of concern that, I'm seeing big things. I'm actually quite excited by some of the things I'm seeing over there, where people are standing up and saying, no, we have no problem with immigrants. Canada's seen the benefit of immigration. We've heard all these stories before where they try to create a bunch of fear about new people that are coming to a country. It's nonsense.
Well, you know that young people, over 60% of them were in favor of remaining.
Yes, that's what I mean. And I thought that looked like it was in the bag. I thought it was in the bag. The bettors thought it was in the bag. All the pollsters thought it was in the bag.
And it's basically angry old white people afraid of their own future, trying to circle the wagons and preserve their interest, and in the process shooting themselves in their feet.
And the kids are the ones who are going to pay for it.
And ironically, we may be on the threshold of unleashing a 60s type thing again, of intergenerational hostility, where younger people stand up and say, BS to you old folks, you boomers and that, who thought you were so great in the 60s, when in fact you were a bunch of frauds, self-serving frauds. And look at the support Bernie Sanders had amongst young people.
Mm-hmm.
It's going to be very interesting. The stuff that's been set in motion with Brexit and even with Trump, we're heading into a period of change in history. And that's why I think, gold is going to trend higher in real price terms.
It's actually trading like a currency for the first time in my career. Seems to be trading almost like a currency, rational currency too, John.
Well, I would tend to use more language as an asset class.
Yeah, I know. I'm with you, man. I'm a supply demand. What's causing the supply to shrink? What's the demand coming from? But it's kind of like lately it's been trading like, a bit of a currency. It's quite surprising to me. I'm more interested in how much Indians and Chinese people are buying up gold than, buying it as a currency. But we're in very interesting times, John. Hey, John, you also follow another company near Lucara, don't you? What's the name of that one? You told me about it before.
Oh, yeah. One of my Spec Value Hunter recommendations has been Sodilo Resources.
What's their symbol, John?
PSD on the venture, and if you pull up Sodilo profile, you'll find the last write-up I did, which was some time ago, which needs updating.
Okay, where would I find that, John? On the main page?
Oh, just on the drop down thing.
Oh, okay.
Get the company itself.
Okay. Oh, just search for them. There we go. I'll get to them. TS is there. That's how it's Sodilo.
Yeah, and then grab the July 15th, 2015 comment. Geez, it's been August since I comment. I guess I'm delinquent.
There we go. Okay, I got it up, John.
Yeah, so we'll scroll down and grab the July 15th thing.
May 22nd. I'm on their profile.
Yeah, just scroll right to the bottom where the Kaiser comments are.
Okay. Oh, right to the bottom. Okay, yeah.
Not going too far, a little higher. There, just grab the July 15th one.
Oh, BK16. Yeah, that's that near Zhuaneng, right?
Yeah. So Sodilo could end up being, no, it's nothing like Zhuaneng. Zhuaneng's a huge, fantastic, enormous pipe. This is a little mediocre thing, just like AK6, now known as Corot, which capped up that La Rona La Cidia diamond, that 1100 carat diamond.
Yeah.
This thing was just like Corolla. It was found, I think, in the 70s or so, and explored by various parties in the 80s. De Beers had it. It was perceived low grade, 5 carats per 100 ton, not very big, and so on. And it just ended up in the government reserve. And a similar story with Caro, where they thought it was smallish, not very diamondiferous. And then Lucara got hold of it along with another group, a predecessor group, and they demonstrated, well, the grades was 15 CPHT, the volume was a lot bigger, and type 2A diamonds were present, which give the Karoe like $400 a carat average value. So it works out still, with a low grade of 50, it's still $50–60 rock, not fancy stuff like Chidliak
Now,
seeds.
John, did you ever have a chance to look at the diamond distribution curve on that caraway,
No,
or
I,
the
I don't
mineral
think
curve?
I've seen one. And it's totally meaningless because
Well, I was curious as to whether it kind of shows that there should be some big stones in there.
you would need an awful lot of diamonds.
Example.
And of course, the type 2A are a subpopulation,
Right.
probably independent population picked up from a different part of the mantle. Now, the thing that Sudilo just put out a month ago that was really exciting was that these diamonds that were recovered by these past inefficient bulk sampling attempts, a number of them have been classified as type 2A diamonds. So this is kind of like the new holy grail for juniors, is to find these old lowish grade junk pipes that if you just looked at the ordinary diamonds in it, they're like $10 rock value and not worth anything. But then discover that there's actually type 2A populations present. So these guys right now want to raise $5 million US to collect a proper bulk sample and establish what the grade is for the main units in this pipe, which they've now delineated it. They know what all the different units are, and then establish a value for the whatever 15 CPHT grade that there is, and see if this can be developed similar to the to the Caro pipe.
Now I'm looking at a overview of this kimberlite, a model of this kimberlite, John, and it's got the various different phases in it. Is there any correlation between the rock packages like this VK, the volcaniclastic 3/W, and what looks like VK2? And is there a potential to increase the size of this pipe?
The pipe's not as big as the Caro pipe, but I think it still could end up being 20, 30 million tons. Caro is 50, 60 million tons. At the end of the day, it's multi-phased. But what's interesting here is that yellow area that you see in the middle.
Got it.
This is a basalt diluted upper fat zone, which the reason it came in at like 3 to 5 CPHT was because it has been diluted as part of the eruption placement.
So Mother Nature's done a little bit of the filtering for you there, diluting.
And so the past bulk sampling, it kind of reminds me of DO27, the Kipu Cho, where Rio Tinto managed to tunnel into a later stage lower grade phase that came in the side and extracted a bulk sample that was not at all representative of the pipe's primary volume. And I think the management's work on the delineating this has shown that, there's a significant volume of undiluted kimberlite here, and now we need to do bulk sampling. They have an aversion to doing micro diamonds, and it's just as well because at low grades you don't get a huge micro diamond distribution, and you just don't get any indication about the type 2A potential. For that, you need to do a bulk sample that recovers commercial sized diamonds.
Yeah, you only get it if you break the shit out of the big stones. Those kind of systems. It'll be very interesting to see if they can match up some of these the phases to the grades, John, and maybe this blue package here looks quite large, as the VK2 does.
Well, but Alan, the question is more, is what is the grade of those different units?
That's what I'm trying, yeah.
So they figured it out. Now they need bulk samples in there. And that's why, if they get the money and get this thing done by early next year, this company's only got 40 million shares out. As 80% of this thing, it trades 60 cents. This could end up being worth several $100 million.
And don't take the sample from the wrong spot.
Another problem they had with the historical bulk sampling is a lot of diamonds go missing.
Oh, really?
Oh, really? I mean, that even happened at Icadian there. Diamonds just went missing. And the grib pipe, the one that Archangel found, which that Lukoil oligarch company stole from the junior.
Yeah.
They were sticking diamonds into dogs and that, and then the dogs were running through holes in the fences, and the dog catchers were rounding up the dogs and making sure that they, pooped out their payload that was being stolen from within the bulk sampling facility.
That's a bit of a sad story. I know Roy Spence had helped find that thing, and he didn't really. It kind of was a heartbreaker for him.
I'm shocked that people aren't more up in arms about this blatant theft. This company, this Canadian company, which found this pipe, should have had at least 49% of it. Instead, this company, Lukoil,
took it.
Yeah, they just took it, and they're putting it into production. It's a world-class deposit.
Wow.
And De Beers put $40 million into it and had it stolen from it.
Wow. And nobody says anything.
Yeah, I don't understand. The guy from Lukoil spoke at PDAC in the Diamond Session one year, and I was going to stand up and ask them, how is it that this Canadian company that found this thing no longer owns 49%? But I didn't really want to embarrass Pat Sheehan, who was the chair of that session. but it was interesting.
The good news is that Botswana is much more mature about the whole diamond scene and bringing outside expertise in to develop these projects. So I'm going to watch this one closely, John. Let's we got a couple more here we got to cover, and then we'll wrap things up, John. CVV, another one of your picks. We kind of broke this one together when they first made the noise about their diamond targets. They had a couple days ago a massive move in the stock, and another company that's been a two-time member of our thumbs up on the zombie search and rescue mission, FEX, which is Fjordland. They also on the same day had some big action, and I was trying to figure it out. What's causing all this action? And I wasn't thinking it could be uranium, John. What do you think's causing this action?
Well, I did a fair bit of digging because, of course, I'm a diamond guy, and I have the history going way back to '92. And De Beers kind of surprised us a week ago. Peter Dazzler from Canalaska put out a news release that De Beers had already collected and shipped 100 samples from their claims in that northwest part of the Athabasca Basin. And Canalaska itself has identified 75 targets within these postage stamp size claims. They aren't just like single claims on top of one target. They're actually claims put on top of clusters of targets that they could somehow tease out from 400-meter airborne magnetic geophysical signatures. And he says there's some targets in there that have a diameter of 500 meters. What's interesting is the speed with which De Beers has gone in there. Now Peter has told me that De Beers did not say that they walked onto the site and found outcropping kimberlite the way it happened with Chidliak Peregrine and on the Chidliak project on Baffin Island. Something like that would have been a material thing to report. So we are still missing confirmation that these magnetic anomalies are indeed kimberlites, and we certainly have no evidence yet that it's going to be diamondiferous. So nothing has really changed since mid-February when we started talking about it, except that De Beers now has in the lab 100 samples of kimberlite indicator mineral samples, and we'll know in a couple of months whether there's kimberlite indicated and to what extent there's diamond prospectivity. I think the market, however, thinks there are rumors out there that are confirming that this is going to be another ECADI type discovery. And Peter Dazzler did a really clever thing. He managed to track down a 1992 series of Como TV sort of coverage done of the early stages of the diamond play up north. And it's really kind of interesting to watch it. You got Gren Thomas with this rather unattractive sweater there, and a lot younger looking than he is now, explaining all this piece of core or whatever that he has, how important it is. And you get these old timers in the Yellowknife cafe saying, "Oh, I'll believe it when I see the diamonds," and all this kind of skepticism. And I think an audience out there has said, the parallel to this historical thing is too close, and they're out there buying this. There's only 25 million shares outstanding. Yes, they do net only 30%, but people say, well, Diamet netted only 30%, 29% to be more precise, and it ended up going to $60 because it turned out to be a major new diamond field. And at the same time, they have that project at West MacArthur where Cameco farmed in earlier this year for 60%, has drilled one hole. It did not yet hit uranium mineralization, but it still gave them.
But they got some sniffs, didn't they, John?
Well, they're in an alteration system, and so Cameco is gearing up to drill some more holes in it. They have to spend $1 million or so by January. So they got to go in there and try and vector in on to see where there is this thing. But Peter told me they were still setting up the drill for the second hole. So there is no leak information from the uranium side there. And by the way, if you'll check there, I do have an outcome visualization for Canalaska.
I actually had while you were talking there, John, I had the claim map that shows all their kimberlite targets, properties, and everything.
Oh, yeah. Where'd you...
Oh, no. Oh, sorry. What I have up is you did a thing on them on May the 18th. That's what I'm looking at.
Tracker.
Yeah.
Well, why don't we pull up the Fiordland?
Well, actually, I got a map up here now, John, and I think it's going to ask the question that I wanted to ask you, which is, it's the claim map that shows in purple all of the Canalaska ground.
See, that's one that I managed to snag from the Mars website in Saskatchewan. Fiordland has published its own. I think even Canalaska has published it. If you go to the Fiordland,
the crosshatch ground, right?
Yeah, go to the Fiordland profile.
Okay, I'll go.
And there you'll see in green all the claims that Canalaska owns, and also in red everything that Fiordland has staked around it.
Why am I not finding Fiordland? Oh, it's FJ. That's why. Hey, quiet. My dog's starting to bark here, John. I'll get him to quiet.
You better let him out or he'll make a mess.
Exactly. Okay, I got it up there now.
Okay, so scroll down.
Yep.
So, yeah, a little further. There we go.
Okay. You go ahead now, John.
So the light green is everything that Canalaska has. The stuff to the east, they still have, that's uranium stuff. De Beers is farmed into all the light green stuff, except the one to the northeast. They sold that to Fiordland. Fiordland is the red stuff. They kind of staked around the company, and all the gray is what all the other armchair stakers in Saskatchewan have map staked since all the news came up. And you can see it's a pretty good, 20 kilometers by 40-kilometer chunk of land. That could be another ECADI sitting in there. So I think the market is daring to dream that it has another major diamond play on its hands. And
Well, my initial reaction was, John, as soon as I saw that action in the stock, I thought, man, they had to have found some diamond indicator minerals. But then, knowing Peter, and he's a really closed shop kind of guy, he's not a leaky kind of guy, and then realizing that De Beers was the one who was out there, it's unlikely that he knows anything more than we know. Now, having said that, knowing what I know about De Beers, they weren't out there stopping at 100 locations for the fun of it. They had to have been able to get samples from there. And if they did, there's probably a chance that they found a little bit of something that's going to give them indications. Now, will we ever see that? I don't know. I'd love to see the grains. I'd like to see the indicator minerals if they're rounded. I'd like to see if they're angular. I'd like to see the compositions. Then we could start really getting our imagination going.
I think that De Beers employees like their jobs, and they're not going to leak something to Peter that they're not allowed to. And if they're going to officially tell Peter, I think Peter would tell us, because that would be even better than BS rumors, because what we are craving is evidence that this thing is indeed shaping up to be not just a kimberlite field, but even a diamondiferous one. Now, right now, with 25 million shares and netting 30%, the stock around $1.40, the market is assigning a value of over $100 million to this diamond play. And if you recall, it was assigning only a $74 million value to Peregrine's Chidliak play. So the thing is, Chidliak's had over $50 million spent on it. And people say, well, what you see is what you're going to get. And maybe Kaiser's right that this thing should be priced 40 to 60 cents and then eventually be worth $1.20 or something like that. Maybe not. But with this Athabasca play, who's to say that it's not going to be like Ekati? And diamond at the end of the day was bought out at an equivalent of $2 billion. So this would be still another potential 20 times increase. So people are dreaming of a company without a gazillion shares out like Canalaska, going to 20, 30, 40 bucks the way Diamond did. And it's kind of fun to see this type of speculation. It's causing a lot of trouble for the shorts and the algos out there who are selling non-existent paper into these price spikes and getting
I'm getting really interested in this Fiordland. Look at all the ground they own, John. Now the thing with geophysics is you can get different kinds of targets from geophysics. Sometimes that you're going to get a booming target. Sometimes that kimberlite might only give you a slight anomalous, slightly anomalous reading. There's no, in my mind, if that's a kimberlite field, there's no way that Canalaska got all the kimberlites.
Well, that was Dick Atkinson's reasoning when he went in there and staked all that ground. These they're all magnetic highs, and that's often the Northwest Territories. Those magnetic highs were all dog pipes, ones that had way too much ilmenite and stuff like that in it. But here, the mag high could simply be a result of the fact that the sandstone is relatively tedious, non-magnetic, quiet background, and you have a kimberlite which has a fair bit of ultramafic type magnesium and iron and stuff like that in it come in there. It's going to show up as a magnetic difference and probably as a pipe-like shape. So you're going to see these circular things show up in there. So it's not a negative that they're magnetic highs.
No, it's relative to the sandstone in the area. So that's benign ground. And then you've got these, even if it's only slightly magnetic, it's going to look like a big booming magnetic anomaly.
But there are going to be limitations, there's going to be local subtle differences which prevent a pipe from showing up at 400-meter line spacing of geophysical magnetic data. So I think if this is indeed a field of kimberlites, De Beers is going to have to do a deal with Fiordland along the way.
Well, make our little zombie pick an even better one, John. I mean, we don't even necessarily need to see Fjordland do a single thing to potentially get a much better valuation. If CVV has any success in finding kimberlites, game on for Fjordland, and they're going to see a heck. They won't be a zombie pick for very long.
Yeah, well, De Beers is mobilizing a geophysical survey on probably on 100-meter spacing, and it's going to be out there flying this stuff. Apparently, it's underway already, and they will have their targets by the end of August, all worked up, ready to drill. And some of the targets are obviously under swampy and watery stuff, but we will probably have our first set of targets drilled by the time the place gets nasty in late November.
Wow.
And then if they start hitting stuff, we'll see another round of drilling in winter when the ground is frozen up there. So Fjordland could just sit back, spend nothing, and wait for De Beers to make or break this play.
And if even the hint that they might be making it, look what it's done to the stock price. So I'm glad we got that on there. I'm glad you brought CVV to our attention, and we've been able to together find this FEX. John, there's another Saskatchewan plan. Why I like a lot of the work you do, John, is you look at these things like a scientist, and you're looking for things that are unique. You got another uranium play out there, Uravan. I just got a thing from you last night on it, where you've done a report on Uravan. What got you excited? I didn't get a chance to read the whole thing, John.
Well, Uravan.
I got it up, by the way. Now you're in Tracker.
Yeah. Okay. So, well, scroll down to the map of the Athabasca Basin. So you can see there are all the little red stars and triangles in the eastern flank of the Athabasca Basin. Those are all known deposits and mines, and what makes them special is that they're high grade. Unlike those 0.03% roll front deposits in Wyoming, Namibia, in Kazakhstan, and all these other places, the Athabasca Basin cooked up some very high-grade deposits. And they tend to be concentrated along these so-called structural corridors. And you can see Uravan has sort of drawn in its interpretation based on all the data sets, geophysical and so on, available. And these are big, deep-seated structural features that rip through the basin, and they became the conduits for fluids circulating, hydrothermal cells developing, which go through both the basement rock and through the overlying sandstone sediment, and they literally harvest all the uranium from all the granite and that which has from eons ago eroded and ended up in this basin, and concentrates it into these graphite beds that form within these fault boundaries, these structural zones, and it acts as a chemical precipitant which forces the uranium and other metals and sulfides to drop out of solution and concentrate within these graphite beds, literally replacing the graphite beds. And of course, so what everybody looks for in the Athabasca Basin are conductors. And the problem is, well, the sulfides that are part of the uranium deposit, they are also very conductive. So you get these long ribbons of conductors, which are in most places graphite beds, and you're supposed to figure out where within these conductors there is an actual valuable uranium deposit. Now, when you go in the eastern flank, it's much easier because these uranium deposits, they usually sit at the unconformity, the boundary between the basement rocks and the sandstone of the basin. and they have about 400 to 600 meter alteration chimneys or halos around the deposit itself that radiate out. So in the eastern flank, the unconformity is much shallower, so you can like prospect that surface and you can see alteration, and you can get a pretty good idea of where within these conductors that you can see with the geophysics there may be a uranium deposit. But when you wander deeper into the basin, the alteration doesn't reach surface. And since the surface is also covered with overburden and all that kind of stuff, you don't even know where to begin to strip and so on to see what the bedrock looks like. So what this company came up with was this idea: how can we see these deeper, where the structural corridors go more through the middle of the basin and end up being deeper, 600, 800, 1,000 meters deep, where you can't see the alteration halo at surface. And they came up with this idea that these deposits attract microbes. Even though they're like 1,000 meters deep, these microbe cultures develop and they seek sulfides. They literally eat the sulfides, gain nourishment from them. And in the process, they liberate the individual atoms, which water flow eventually brings to the surface. And it ends up, these atoms end up sticking to clay particles and get absorbed into tree cores and so on. And uranium decays into 2 lead isotopes. Well, there's 2 types of uranium, and that are always present in a fixed relationship, and each decays into a certain isotope, which also has a different, the uranium thing has a different half-life too. So if you have a ratio of less than 0.61 of the 207 to 206 lead isotope, you're sitting on top of uranium mineralization. Where it goes above it, you're not. And so these guys have sort of flip-flopped the strategy for the Athabasca Basin. Said we start with geochemical sampling, we look for these anomalies of the lead isotope, then we go and do the geophysical stuff and put it all together, and where we see the conductors in close proximity to the geochemical signature, that's where we want to drill. And the key thing there is, drilling these $300,000 holes, I mean, that's expensive. So you want to be pretty close to within the ballpark of a target with the first hole. And once you drill, then you start getting the alteration system, the dravite and all this stuff. And then you can start vectoring in using, traditional understanding of how these systems work, and then home in. And once you spear your high-grade 10%, 20% uranium, well, then you just start doing very short step-out holes, such as is being done by NextGen on its Arrow deposit in the Patterson Lake corridor, or the West Virgin corridor. So
now, John, there seems to be, is this significant? Because if anyone's looked at the Athabasca Basin, you'll see a big area where there's no claims, and then there's a big area in the middle or on the exterior where it's all claimed up. It looks like they have a couple targets here that are not off the beaten path, I guess it would be fair to say, isn't it?
The outer ring, you mean?
Yeah.
Well, they sort of are off the beaten path because, but you're right. You'll see like that corridor. You see a line of claims following this Cable Bay corridor, and yes, the geologists know you're not going to find any deposits in the dead zones between those corridors because there were no fault structures that would have allowed hydrothermal systems to circulate. So
and you can see that in all these deposits on the eastern side, they're all in that structure.
Yeah, that eastern corridor, and little splays off it.
Right. Okay.
So if this outer ring thing, if they snag something, and because it's sort of deeper, then it hasn't received as much exploration, so there are no deposits. But you move over to Patterson Lake South, and you see there's nothing in that West Virgin corridor also. And Fission found Patterson Lake South by following uranium boulders, chasing them down, tracking them down. And of course, it's all overburden covered. And in that area, the basin that used to extend beyond its current boundaries, erosion has stripped off, cut off a part of the basin. So what they have at Patterson Lake South is just basement-hosted mineralization that probably was had an even bigger deposit at the unconformity, where you have the special conditions for the sponge to soak up a lot more uranium. And then what NextGen has done is it's wandered further along the corridor and found stuff at about a 600-meter depth. So similarly in the Virgin River corridor, you see the Centennial deposit that has been found by Cameco and the Stewartson project. That's what's optioned 70% to Cameco, and they came close last year, but not close enough. They had access restrictions. They didn't have helicopter support, so they couldn't move to the best place. So the Cameco drilled a couple holes, and it has to go back in there in January to spend another $1.5 million, or it loses that chunk of land. These Stewartson extension things were what Eurovan managed to stake before the Mars moratorium kicked in, and the ground in between is owned by NextGen, and I don't even think they know they own this. But from work that Eurovan has done with both geophysics and sampling, there's a uranium system that goes right onto that NextGen ground. So at some point, NextGen will probably make another uranium discovery within that area. But
I'm noticing something else here, John. In this outer ring, and a couple of these claim blocks are right at the margin of the corridor, at the contact there. Is there significance to that? They followed right along it here on the outer ring.
This one doesn't have it. Okay, but they had some other graphics, and the thing is, when you go to the east of where they have the claims, the ground changes dramatically. It's got a much more intense magnetic signature. So, these guys, they know what the rock types are. So the Eurovan guy, Larry LaHousna, I think these guys started working in this area in the 70s. So they know the Athabasca Basin inside out, everything that makes it tick. That still didn't prevent them from screwing up in 2011 and wasting $2 million drilling what were just a few geochemical dots on the map without bothering to do any geophysical surveys. And so here,
actually, I read that in your piece, John, and it really sparked my attention because, I've talked to guys out of university before, and one of them we called One Till Phil. He was a glaciologist, and he was convinced he could tell us how, with one till, he could tell us how to find kimberlites.
Yeah, good luck with that.
One Till Phil, what I was going to get at is One Till Phil quickly realized that he needs more than one till sample to find a kimberlite. And so when you told the story about the scientists that kind of fell on their butts, I got a chuckle out of that.
Now scroll up to the ZTEM map that I have in there. And just try and fit it into the.
Okay. Oh, so I can get
not that one, the other one.
The big one.
Yeah.
Okay.
So up in the northern part, you'll see a bunch of drill holes all the way down to 04. They did not have this EM data at the time. And okay, you can see the gray dots are all blanks, where the ratio is higher than 0.6 to 1. And the red ones are ones where it kicked. So they kind of drilled a few random holes near where they thought they had a lot. But now when they see this geophysical stuff, area A, those are superconductor targets. And when a junior gets those, it normally goes and raises $1 million or $2 million to drill them. Same thing down there in area B. Now, they did drill hole number 3 right into the heart of the conductor, and all they got was some very anomalous, barely anomalous uranium mineralization. They didn't even know they were drilling into a hot target. But the geochem is pretty sparse in this area. So, and they now know that the geology dips to the northwest, whereas what you really want is to dip to the southeast, because that's the way the thrust faulting works, and it's where the thrusts are over the underlying rocks. That's where you get the kind of sandwich effect, where if there's a fault running through it, you get good deposition. And down in the area B, you'll also see they've got a few squares that kick, but most of it is empty. So they're kind of in retrospect thinking we were real dummies to drill where we did drill without having any geophysical support. And even in hole 4, there's no conductor there whatsoever. So that was a total waste of a hill. Where they are now excited is in that ORX anomaly and it's in that western part where you see a more subtle EM anomaly, and they've drawn a little striped line as a conductor. That's about 2,500 meters there. They've got a very intense geochemical anomaly. They don't quite understand why they have all the dots to the
Oh
east,
yeah,
except
John, I can
there
see.
is a fault structure that goes through there, so there could be a lot more going on. But
I
they would
see.
like to raise $1.5 million to drill 3 holes into that area there in the southwestern part of the oval. And you wouldn't really figure that out reading their news release. Their news release is dry. I had to actually talk to management and have them walk me through all this stuff. And the write-up that you have there explains it, I think, in a way that it makes sense. I mean, I got pretty excited when I finally figured this out. That's why I put out that tracker last night to alert everybody, say, hey, this thing is finally game on. These guys, this is probably the best uranium target that can be drilled that doesn't already have a drill hole in it. That's basically virgin
Well,
territory.
your piece caught my attention for 2 reasons, John. One was the scientists that have sort of fell on their butt and are now getting back up and taking a look at the data and trying to look at it from another angle and figure out, like in this case, you can clearly see the samples are very sparse down in here. And in this ORX anomaly, you get much bigger kicks consistently across almost the whole ovoid there. And then it gets kind of sparse again. The other thing that caught my attention, John, was you made the case that this company has the potential of 100 times your money kind of potential. I think I got that right. Now, I've always known you to be a pretty conservative guy when it comes to that kind of stuff. And you actually put it into context of some other deals that you follow and sort of what you were potentially looking for out of them. Why do you say that this one's one that could be just, those old kind of astronomical kind of gainers?
Okay, well let's go back to the outcome visualization page. And let's first look at the Canalaska, where I first did an outcome visualization where I imagined what if they found a 1 million ton West MacArthur sandstone hosted deposit? What would it be worth? And
I'm there.
Canalaska, there, go to Canalaska.
There we are.
And then you can see the
West MacArthur outcome visualization.
That if they came up with this and they net 40% at the end of the day, it would be worth $1.5 billion based on the 10.5% discount rate and $41. Actually, I still got $43 a pound here for these guys. But you can see sort of the the S curve there. It's still at the target testing stage. They haven't hit the deposit yet. But if they start to hit, you would see this thing switch into a discovery delineation. It could go as high as $19 just based on that $1.5 billion outcome. Mm-hmm. And if you look further down and go to, like, say, the optimistic $65 a pound long-term price that everybody uses,
mm-hmm.
the thing becomes worth $3 billion US, which is about 3.7 billion Canadian. So we're talking like a $40-$60 price.
Yeah.
Case where uranium goes back to $65.
Okay.
So if you look at the one with the $1.18, you can see what I guess it was there. Yes, it's a little higher today. This is the type of action the market wants. It wants a discovery in a context where you can suddenly dream, hey, this is a West MacArthur taking shape. Now, in the case of the West MacArthur target, we don't have this lead isotope geochemical stuff. This may just be a conductor where hydrothermal fluids came through, and for whatever reason, no uranium ever got dropped down. So until chemical spends couple million bucks there, we don't know. But in the case of Uravan, where you have the geochemical support, and they have similar geochemical support over Centennial and Cigar Lake and MacArthur River itself, there you can start to dream that, hey, there's a prize here. We know there's a prize here. You know, maybe we won't get it on the first $1 million worth of drilling, but we will within $2 to $3 million. So let's take a look at the, I basically mapped that outcome visualization to the Outer Ring project.
Okay.
You switch to the Eurovan.
Okay.
My throat's telling me I'm too much of a windbag here.
No worry. Oh, there it is. Okay, Outer Ring. Okay, I got it. Perfect.
So there, let's just scroll right down to the one with the 21-cent price on it. And there I come up with, I've got an 8% discount rate instead of the other one. But about 1.8 billion Canadian, which is equivalent to just about $39 a share. So you see that little star there, the 21 cents?
The market's giving them no potential for...
Yeah, the market says this is science BS. These guys are clowns. They've been wrong the last 4 years. Kaiser has been an idiot. He keeps talking about the same thing. But what has changed, we now for the first time have a really strong geophysical context correlating with a geochemical context, and the company owns 100%, only has 46 million shares. So what's happening today is this stock is now moving into the blue channel. The market's starting to price it properly. Like I say, it should be really in the 40 to almost trading between 40 cents and $1 and raising a couple of $1 million somewhere
even
in
at
there.
40 cents, it would still, the market's not giving them much. I would say they're still not giving them much.
Well, I mean, how many, my pitiful subscriber base, they don't have a lot of money. They already own all this stuff. If somebody with a big subscriber base latched onto this story, it would be 40, 60 cents right away.
Well, I don't have a big subscriber base, John, but I think I want to start pounding the table a little bit on this one too. I love these science plays, John. I love it when companies are looking at things with a different perspective and trying to reassess the science. And you know, these guys are, this could be rinse and repeat too, right, John? Like they're creating something where they can do this over and over again.
Yeah, and they've actually decided we're going to be anti-prospect generator farm out type. We're going to farm into other prospects. All the corridors are owned in the Athabasca Basin, both by big companies like Areva, which don't know what to do with their properties, and other juniors who have no money, who've spent, Canalaska spent over $50 million of their Korean and Japanese partners' money drilling geophysical targets and didn't find a single thing. Absolutely nothing.
That's not just if you do find something too, John, it's very expensive. You got to be able to target, and because you're going so deep with looking for this super high grade rock, the better you can target things, that you're going to save money and ultimately get a better valuation at the other end for your shareholders.
That's right. So what these guys are going to do is they're going to approach some of these other juniors that have ground in these corridors, and they're going to propose a farming deal. And all Eurovan will do is, spend $100,000 on a geochemical program, and if it lights up, they'll start spending more. If it doesn't, then everybody has closure to say, it's just a square on the map that you have. There's no point wasting more money. Let it lapse and let somebody else restake it down.
Now I understand. Now I understand why you bang the drum on that one a lot, John, and your all these other ones. Now, there's another company out there that you follow, and it's got a similar kind of scientific generating with new sort of, I don't want to call it new science, but newer science, that is Nevada exploration. And they remind me of what you're saying about this Eurovan. They kind of got a similar story for gold down in Nevada, don't they? Not similar science, but similar kind of idea of using new technology to create targets and drill those targets.
Yeah, no, there's extraordinary similarity. In the case of Eurovan, I haven't blown the brains off of myself and my readers out because the company did not run out of money and require a 10-for-1 rollback. Nevada exploration was a heartbreaker because they had the Grass Valley project all dressed up. They had McEwen as a partner. McEwen did get the concept, but he had also all these underlings nattering away at him. We don't have money for things and stuff like that. So they drilled one hole on Grass Valley, which has a great golden groundwater anomaly, and managed to hit a block of uplifted tombstone of upper plate rock, and they walked away, and it totally crashed the company. Everybody figured, this stuff doesn't work.
So they drilled one hole and walked away?
Yeah, I mean, it was like an expensive $200,000-$300,000 hole, but because they didn't get any confirmation whatsoever, they just walked away. And of course, it was a tough time.
Was there a geological reason that they got skunked, or?
Yeah, well, in this part of Nevada, you have all these blocks of rock. They get hoisted up and down. And if you get lower plate rock hoisted up, it's closer because it's the lower plate rock, which is the host for the Carlin type deposits. Then it's great. Then you get like Carlin type, Cortez Hills, all these things in huge, 20, 30 million ounce deposits of medium grade right near the surface. And in this case, it was actually down dropped, so you had the upper plate rocks in there, and so you drill into that, and they're unaltered, they're boring, they got nothing in it. The company went on to found these old geothermal holes that had been drilled farther south, and they tracked them down and managed to get the sample splits that had been retained, and they assayed them, and they actually came up with a very low grade anomalous gold, but all kinds of interesting minerals and stuff, alter evidence of alteration, showing that indeed this area is, I see you've got it up there, yeah. I mean, in that southern part of this area there, something pumped the system and could very well have put a gold deposit in there. Now, the thing with the golden groundwater is they're measuring gold and other pathfinder elements in the groundwater that has crossed over bedrock and dissolved a little bit of that bedrock and the gold in it. And it's old technology in the sense that in the 60s, big companies were using groundwater sampling in gravel, overburden covered areas in Arizona, looking for copper and so on. Gold, unfortunately, only comes in at parts per trillion in water samples. So nobody could ever assay for the gold concentration until about 15, 20 years ago, when the labs finally got their detection limits down to a level where they could actually see the gold dissolved in the groundwater. And this team, Wade Hodges and Ken Tuller, they came up with this idea. In fact, it was ironic. They were stuck doing EPA environmental baseline studies on something called, I think it was Mule Canyon, a deposit that had been found through grid drilling in the basin through the basin gravels. Mm-hmm. And when they plotted up all the poisons, mercury, arsenic, and so on, said, "Wow, we can see the shape of the deposit. We could have just done an environmental baseline study first and then drilled. We wouldn't have wasted all those holes miles and miles along the flanks of the valley where there are no poisons in the groundwater." And then they got the idea, hey, Nevada's a special place. The deposits were formed 45 to 20 million years ago, thanks to this rolling back subduction slab. And then 15 million years ago, it extended, and the basin and range formed. And half of the gold was basically artificially dropped down and buried by gravel, that sand that eroded from the ranges that popped up. And so everybody's been focusing on the ranges and projecting structures into the gravels, and then doing grid drilling and finding really fantastic stuff. But where there's nothing in the ranges to get you excited, you would blow your brains out grid drilling through the gravel. So
if you could get money to even do anything.
So these guys have spent collected like 6,000 samples in about a third of the available basin, the shallow parts of the flanks of the basins in northern Nevada. They've got about 20 interesting targets identified that they do not own. They're on open BLM ground. For about $1 million, they could slap down claims on top of them to secure the likely source of whatever this anomaly is coming from. They own three major projects in that so-called overlap area, where the upper plate's been thrusted over the lower plate. There's the Grass Valley, there's Grass Valley South, and there's what they're now calling the Kelly Basin. And the company just announced a 35-cent financing. I've been quiet about it since it did its reorg, and Dennis Higgs came on board as the new CEO, because haven't had any money to do anything. But now I'm starting to get excited about it again, because with fuel in the tank, they can go in there and start drilling scout holes in the areas where they have the good geochem coverage, or golden groundwater coverage, and start vectoring in.
Well, you know what excites me about that part of it, John? You brought this company to my attention 3 or 4, maybe 5 years ago, and what I like now is now they have their future in their own hands. They have enough money to go and thoroughly test their theory, and you can't go in there with a one-hole wonder and expect to hit. It doesn't work like that. But if you can see, like they did in those anomalies, that you could see in the geochem what the deposit looks like, and if you can do that in gold in Nevada, well, kitty bar the door, you're going to have a lot of attention and a much bigger valuation. So I'm really excited that they now have their destiny in their own hands.
And there's a similar hero's journey parallel with Larry LaHousen's team, because these guys in the beginning also thought, oh yeah, we have our golden groundwater technology, we perfected the way of the protocols for collecting this stuff in a repeatable way. Here's the target, let's take money and let's poke holes at it and see what we got. Well, they now know, just like Larry LaHousen does, the geochemistry by itself is not enough. Right. You need to go in there and collect the additional data sets. You need gravity data, you need the magnetic data, you need seismic data, and ultimately you also need scout drill holes, which help you log the geology and tie that into all the geophysics and seismic and create a 3D model. And so, like Wade Hodges, now that he finally has money in his hands again, and has a management team that won't let him just go rush out there and drill a bunch of holes, he's got himself the leapfrog system, where he's now integrating all these data sets and basically putting himself in a position to truly think about this stuff. And I think we talked about this the other day of the
when you
technology revolution.
I was going to say, John, my buddy, Genna McDowell's kind of my mentor in geophysics. He's been using that leapfrog for years. It's really awesome how you can layer the data on top of it, which, like you were just talking about, makes the story much clearer.
Yeah, so he's they've just put out a presentation on the Kelly Basin project, and I saw his leapfrog.
Is that Kelly Creek? Do they call that Kelly?
They call it Kelly Creek. I don't like to use the word water words in mining projects. It's not a good idea.
Okay.
just call it whatever name. Don't call it the water name.
Yeah, I got you.
So I'm pretty excited, because he showed me the presentation, and whereas before it was like, oh well, here's our groundwater. Now he actually has a structural model of, and it looks like a Dalvador Sally nude, the way he spins it around. I think once he shows it to at least the mail brokers out there, they'll start paying attention to this graphic that he's created. And so now they can actually focus their drilling activity. And they've figured out how to add a little scorpion drill to their geoprobe truck, so that they can get deeper water samples, and in some cases they might even be able to get into the bedrock and maybe grab 5 meters of bedrock, because that's really critical, because nobody really knows what the bedrock's like in these areas where there's no special reason to have projected anything from the range front. And so when they go there and get their interesting groundwater samples, they can also map the bedrock. And that company we talked about earlier, Sodilo Resources, they had a project in Botswana called the Cowden, which was a copper project. They had that farmed out to First Quantum, and they think they have a copper belt type setting in that area, and they also have 100 meters of Kalahari sand and calcrete above the bedrock. And First Quantum did like $3 million worth of holes that collected bedrock samples and groundwater samples as part of simply creating the database before they got around to drilling. Unfortunately, they spent like only $1 million on drilling out of the 15 million, and then had to pull the plug because of their financial problems.
Huh. Wow. Yeah, that's I like this. This is a great gold story, John. That's and I think we've given the audience a lot to think about. And by the way, folks, while I was doing the show, I've been filtering and focusing on John's website and the various. Most of this stuff is actually available to anybody. Some of the stuff is available only to his subscribers. And you could, for $100, you can join his subscriber for a few months and check all this stuff out, because as you can see, as I was using the various tools that he has and his reports, there's a tremendous amount of data in here. John tells the story of a company better than the companies that themselves do a lot of times.
Yeah, well, that's how I get to come up with good picks, because management is incapable of spinning their story in an intelligible, exciting way, which is why they're very cheap. And my specialty is sniffing out these marketing challenged companies and helping explain their story.
I like doing that too, John, and that's sort of why I got into the writing newsletters. Was I felt like I hung around with a lot of geos that weren't very good at telling the company's story. So the audience needs people like us out there, John, that sort of get the rocks and get the geo speak and can present it in a way that the average investor does it. And you do a wonderful job at that, John. And thanks a lot for help sharing that with our audience.
And the big thing I'm doing now is this outcome visualization thing. The companies aren't allowed to tell us whatever economic geology they're doing. And the dirty secret is most of the geologists don't know how to do economic geology and don't do it, even though they should be doing it. So when I force them to describe, at least in geological terms, what they're trying to accomplish, that's only half the work. The other half is me then figuring out, okay, they say this is what they think they have, what would it be worth? And sometimes I find out that it would be worth nothing. So they're like chasing a worthless phantom there. They're like pretend lifestyle type people. And sometimes it's simply because they do not understand the economic mandate, that they're supposed to go after economic deposits, not zones of mineralization. These are not science projects for the geological survey to write academic papers about. So this stuff here I'm doing with outcome visualization, it's part of a whole process of forcing these companies to have a target that's big enough, potentially rich enough, to actually result in an S-curve type market action. Too many times they just come up with nothing targets that can't deliver anything, and then they wonder why the stock sits there, does nothing. The whole thing.
I hope you force them all into doing things differently, John, because the way you present it here, investors can start to think rationally about these things. Not chase goofy valuations and get burned and see their money go to waste. They can actually do a better job of investing and finding the quality. These tools you have are just incredible to me, John. I wish they were around when I first got into the business. I can't recommend them enough to investors out there that follow the space. John does most of the work for you. In the case of this company, Sirius, that I have up right now, he's assessing a realistic potential. Potential is the important word at this stage, because they certainly haven't done enough drilling. But by doing that potential analysis, we can then go back and see, well, where are we on the time frame? Where are we on the curve of where this could get exciting? That sort of stuff is invaluable to me as an investor, John, and I'm really stoked about this work you're doing.
Yeah, well, the stuff wasn't available. I had to invent it in order to be able to use it.
Well, you've done a great job, and you've shared it with me for a number of years, John, and I've taken the time to try to understand it, and I think that all investors should do that. I'm going to close things off, John. Thanks again for spending so much time and explaining all these picks to us, and you got me all excited about I might even phone up my broker.
Well, too bad the market's closed tomorrow.
Oh,
Have a good long weekend.
I'll have a long weekend to think about it. Thanks, John. And we have a long weekend up here. You have a long weekend down there. Happy 4th of July.
Yeah, we celebrate our respective nations' birthday.
Perfect. On that note, before closing, I always like to say this show is for information purposes only. It's important for you to do your homework and speak with your financial advisors before making any investment decisions. I want to thank my guest, John Kaiser. Thanks a lot, John. This has been awesome.
It's a pleasure, Alan.
And to my sponsors who make the show possible, and for you viewers, it wouldn't be worth doing without you showing up. Thanks a lot, and have a great day.